Hello, I'm Alex Davies, founder of Wealth Club. Today I'm with Karen McCormick, Chief Investment Officer of Beringea and the manager of the ProVen VCTs. Hello, Karen.
Good morning, Alex.
First, can you just give me a background to Beringea and your own experience?
Sure. As you mentioned, Beringea are the manager of the ProVen funds. We have more than a 35-year history as a corporation. As a manager, we have 700 million under management across offices in the US and the UK. Of that $700 million, the ProVen VCTs make up just over £200 million. And we have a history and track record of early stage growth capital investment, and that's what we've been doing with the ProVen VCTs for nearly 20 years now.
And you've got 2 VCTs opening. How much are you looking to raise and why?
Sure, we're doing a relatively chunky raise this year. We're raising $60 million across the 2 VCTs with a £20 million over allotment. There are a couple of reasons that we're raising this year, 2 key ones. I mean, really, the primary reason for raising is because we believe we can generate a great return on that cash. There are myriad opportunities. Deal flow is stronger than we really have ever seen it, and we've got a great team with a strong track record over 20 years consistently. We're also at our current rate of spend and our current target for this year, which is a £50 million target, we'll be able to deploy the cash in roughly a 2-year horizon. So we think it's a great time to be investing. There's kind of a secondary reason, and while we are not market speculators and we don't intend to call the market, history would suggest that there's likely to be some sort of economic correction or softening, and we can actually see some of the market multiples starting to soften in certain sectors, largely due to macroeconomic factors like Brexit or the unpredictability of some of Trump's policies, or just general softening or fluctuations in the US stock market prices, which trickle down to us. And should a market correction happen or should prices start to soften, it's always a good time to buy. So the primary reason really is because we can generate a strong return, and also we think there's probably going to be a good time to buy over the coming years. And
there's a lot of VCTs around. What's different about yours?
Sure. I mean, I think a couple of the things that differentiate us. One is the really strong consistency of both track record and investment strategy. Since the beginning, we have been early stage growth cap investors. For us, that means we look for businesses with established commercial history and commercial track record. Generally, the businesses we invest in have at least £1 million in revenue at the time that we invest in those businesses, but more often they have sort of 5 to 10 million in revenue at the time that we invest. So we're making investments consistently in businesses for growth capital opportunities, and we have a significant track record over the last 20 years. We've been consistently generating strong returns, and we've had a team that's been together for ages. The other thing that significantly differentiates us is our US entity, and we have been a US and UK company for over 20 years now. We leverage the US offices and the US investment team to help assure that businesses moving to the US have a better rate of success than they would otherwise, and we can also provide a lot of insight and intelligence to what's happening in the US market to our European investments.
And is there any type of company that you look for, so specific areas, specific industries?
Sure. I mean, to be fair, we're a generalist investor, and our investment strategy does move with the times, given we have an evergreen fund. But the things that we find most interesting these days and that we're spending our time and effort on tend to be business software and services. Often that can mean SaaS-type businesses. Consumer has done extremely well for us in the last probably 5 or 6 years. And consumer for us means anything from actual consumer products to technologies selling insights into the consumer industry. And then digital media has been a significant part of our history and track record and continues to be of interest for us.
Karen, can you just tell me about some of the companies already in the portfolio? So what am I going to get access to as an investor?
A couple of examples, a couple of kind of different examples. Chess Dynamics is a business in the portfolio that's we've had for a little while and has continued to perform really well. They do defense and security electro-optical systems, including anti-drone systems that are currently used by the US government. So that's a business that continues to perform quite well. My First Years, which is a personalized baby gifting company that has done really well both in Europe and then in the initial expansion into the US, and has been favored and featured by the royal family on multiple occasions and worn by Prince George and Princess Charlotte. POC, which is an app commerce business. So if you think about traditional e-commerce, most businesses use an off-the-shelf sort of software or platform. POC does similar things, but for mobile apps. And for a number of their clients, such as House of Fraser, Holland & Barrett, Misguided, quite a lot of their revenue, if not the majority of revenue, is starting to come from app commerce. So that's a business that continues to do really well. And then some investors might be familiar with some of the things that we've held for a while and continue to perform well, like Bliss Media, which is a marketing services company with over 50 million in revenue that has 8 established offices, including the US, and then Monica Venator, a company which we made a decent return on, or quite a good return on, when we sold a portion of our shares in the past. We continue to hold a meaningful stake, and that company continues to surpass expectations every year.
Can you give viewers some examples of recent investments you've made?
Sure. We've had a busy couple of years, and I guess some of the recent investments would include things like Smart Assistant, which is an Austrian-based business that is a digital shopping assistant. So people like Canon, the camera manufacturer, or Sonos, the speaker manufacturer, will use the product to help consumers make guided purchase decisions for things that might be complicated. It goes through a question and answer, a simple question and answer, to narrow down the selection to make sure it meets the consumer's needs. The business has done phenomenally well since we've invested. They're going through another round of funding, which would be a significant uplift on our current holding value, so that is potentially quite good news. We recently invested in a business called Thread, which is a menswear e-commerce business. They closed a £22 million round, which we participated in, that was led by H&M as a strategic investment. And we've recently opened up funding to the crowd via Crowdcube, and they experienced one of the fastest fundraisers, hitting their target and then exceeding it by 2 times within roughly the first 48 hours. So that business has done really well. Astemos would be another example of a recent investment, and that is an artificial intelligence software product that allows companies to do research into patent intelligence. So gathering information about existing patents, about what those patents entail, the scope of those patents, and projects that used to take hundreds of thousands of pounds in research work and weeks to months to complete can now be done in seconds or minutes using the Astemos software. So those are a couple of recent examples.
The rules changed recently. Are you finding it, are you having to change your strategy a lot in how you invest?
No, I mean, for us, the rule changes have been pretty consistent with our strategy from the beginning in terms of growth capital and investing growth capital in relative early stage businesses. So there hasn't been a significant shift in strategy at all. One of the things that has been helpful with regards to the rules, companies that are deemed to be knowledge-intensive companies, which are companies that we're permitted to invest in, the government has changed some of the guidance such that we can mark the initial year of trading as the initial year that the company made at least £200,000 in revenue, which means certain companies that might have been older than the rules would allow for us to make investments would now qualify based on the first trading date being when they made £200,000 in revenue.
If we look at exits, you've had a very good year, haven't you?
We have. We've had a great year, yes.
Okay, so can you talk about some of those?
Yes, sure. We've had quite a lot of exits this year. I'll try to give a couple of examples. One of the better exits being Watchfinder, a business that does pre-owned luxury watches that they refurbish and provide warranties against. That business was sold to Richemont, and as you can see from our accounts, we generated a 9 times return on our initial investment, which is a great return for us. We also sold a business called Chargemaster, which does electric car charging stations. That went to BP, and it was widely reported as a £130 million sale, which again generated a great return and a phenomenal IRR for us. We also sold earlier in the year a business called Dynamy, which was recapitalized by the BGF and other investors, and that was a great return for us as well. So it has been quite a phenomenal year in terms of returns.
If I'm going to buy a VCT this year, why should I put money with you?
Yeah, fundamentally I think it's because we generate great returns, and we've been doing so consistently for 20 years. In addition to that, we have a team that has been together for quite a long time. The US offices give us a significant advantage both in terms of being able to commercialize globally but also provide insight into other businesses and models. But fundamentally we have a strong portfolio that you'd be buying into, and we have a consistent track record of great returns.
Karen McCormick of Beringea, thank you very much.
Great. Thank you.